Hello, accounting students. We are starting Chapter 20. Chapter 20 is actually focused on merchandise inventory and how we track that inventory and how we estimate how much inventory we have. Now, inventory is very important to keep track of, as many times this is one of the business's largest asset that they have on hand. And the more merchandise you have in inventory as an asset, the less cash that you have on hand. Your goal, of course, is to try to keep as minimal inventory as stock as possible, but yet still meet the needs of your customer. Now, back in Chapter 9, we learned about inventory methods when we learned about merchandise inventory. That was when that account was first introduced. We did not spend a lot of time talking about inventory at that time. In fact, they just gave you the inventory numbers, the beginning and ending inventory numbers. They just never explained how you got those numbers. There's two types of methods for determining the quantity of inventory on hand. One is called periodic inventory, and this is when the merchandise inventory is evaluated at the end of a fiscal period. Another method is the perpetual inventory, and this is when merchandise inventory is determined by keeping a continuous record of increase, decreases, and the balances on hand of each of the items of merchandise known. It's also referred to as book inventory, and this is just where you are truly tracking everything that you have. Now, all businesses will find a time in which they will do a physical inventory, and this is where they go in and actually count the merchandise on hand, and then they compare that to their periodic or perpetual inventory. Now, an accountant doesn't care so much about the specific number of each item on hand. He or she is more focused on the actual dollar amount in which inventory is. Now, of course, in order to know that, you have to understand your gross profit, as in your retail sales, as compared to the cost of merchandise sold, which we saw that demonstrated on our last income statement. But there has to be a way to estimate that merchandise inventory. So in 21, we're actually just learning how to keep a stock record. In 20.2, we are learning how to determine the cost of inventory using different methods. And then in 23, we're learning just how we do an estimate of each of those items. In order to keep stock, we do a stock record. Now, there's actually an inventory record, and the inventory record actually shows your number of units that you have on hand and the unit price in which you paid for that, and then the total cost. As you actually purchase merchandise, the cost might change, and we're going to learn more about that in section 20.1. The inventory record also just keeps track of every item you have versus a stock record. The stock record, in which that's what we're going to complete in 20.1, work together and on your own. A stock record is actually for each individual item. So you know exactly what you have on hand, and when you're making your sales, when you sell your items, when you purchase to increase the item, and so forth. Also on the stock record, it tells you when you need to reorder, how many you should order, and it tells you when you need to make that reorder. So in our example, on page 63 in our workbook, the item is a soaker hose. It gives us the stock number. It tells us that whenever we reorder, we're going to order at 40. We're going to order 40, and whenever we get down to a minimum of 10 in stock, that is when we're going to place that order. So as we take a look, turn in your books to page 625 for the Work Together 20.1. Now, I think you will find this to be pretty self-explanatory in the process. If you take a look at the stock record, On the left, on the top part is the full description. The left-hand side, this is when you make a purchase. So when you purchase something, you're going to record it on the left-hand side. The right-hand side is if you sell something, you will record it on this side. And then the far right side where it says balance is where we're going to tally and keep track. So let's go ahead and do the first one together. So on October 3rd, we sold 3 of the soaker hose, and the invoice number is S835. So since we made a sale, that means that it has decreased, it has gone out, and you will notice it says sales invoice number. So we're going to go ahead and record that. Maybe. So you're going to put the date there, October 3rd, the invoice number, and of course my handwriting on this is horrible, that we purchased, that we sold 3, and there was 12, we sold 3, so now there are 9. So at this point, we see that we are now below the quantity that we need. We need to have a minimum of 10 in stock. We are down to 9. So you will notice on October 27 that we go ahead and make a purchase. So we're actually going to come down a line and move over to this side. So October 27. Our purchase number 11221. Quantity 40. We had 9 in stock. We ordered 40. We now have 49. Okay. On October 29th, we sold 5. So again, 29th of October. Our sales invoice 886. And we sold 5. 49 minus 5 is 44. And then it says on December 4th, so D4, we sold 3, sales number 912, 44 minus 3 is 41. Okay, that is all that there is to 21. Now go ahead and try the on your own.